Well, I guess welcome. This video is going to be basically how I use these three things in my trading almost every day, and this is really what made me profitable. Okay, before this I was a little bit break even and there's some psychology issues, but using these three things can make you profitable literally within a week. If you just practice and you cut out your emotions, you will be profitable. In order to be able to use these, you need to know what each one means, and not super in depth, but you really need to know the concept and the theory or the reason it works. Okay, you need to know why the market moves the way it does. So a liquidity sweep is basically when a previous high, right, or previous low gets taken out by newly developing price. Now, I know that might sound complicating, but it is really not. It is probably one of the most simple things in trading. So, right here you have a little uptrend, okay? Price develops, whatever. Once this high gets taken out, this is a liquidity sweep. Okay? Right here. We came up, took out these highs, and then pushed lower. The reason this happens is because people that are in trades, a lot of the times, retail traders, they'll put their stops at the most recent high if they're in a short position, right? Let's say they entered short here, okay? They're like, oh, like, we're definitely going down, right? I'm a retail trader, let's short this. No. Price comes up to their stop, fucks them. Once they get exited out the market, it is easier to move price in the direction they want. That is why it is called a liquidity sweep. Something being liquidity, it means it's easy to move, okay, like cash. Like it's an easy asset to move. If there are less people in the market, the bigger buyers and the people with the most money, it's going to be easier for them to move price wherever the fuck they want, all right? If they want to move price lower, 99% of the time, they have to sweep a high. They have to sweep liquidity. ES and NQ are correlated. SMT stands for Smart Money Techniques, okay? Now, like I said, you need to sweep liquidity in order to move price higher, okay? Same, vice versa for lower, right? You have to sweep highs to move lower. Same thing. Lower, high, okay? Right here, you notice, hey, you know what, Isaiah, we didn't sweep this liquidity. Why did we move up? You don't always have to sweep liquidity on both pairs, okay? It can just be on one. When it is just on one, that is likely a good indication of a reversal, okay? That is what SMT is. When you're making a higher high, higher low, higher high, whatever, and the correlating pair doesn't, all right? It makes a lower, right? This right here is the SMT. These connecting, you can see this right here, it moved lower. This right here, it moved higher. Okay, why does that keep happening? All right, so let's get this shit out the way, and I hope you can see it already on the chart. Right here, this low didn't get taken out, right? It came down very close to it. Did we take it? Did we move past this price? No. Right here, you see we did though, okay? This is SMT. Okay, so now that you know what SMT is, right? When there's a Kraken correlation between two correlating pairs, right? NQ and ES, now you need to know opposite order flow disrespected, okay? A lot of times in trading, I'm going to say this now, people will use big words to explain very simple things. It is really not that hard to understand. People see this opposite order flow disrespected, like what the fuck does that mean? Opposite order flow disrespected means if you want to go short, right, you need to see bullish PD arrays, meaning bullish order blocks or fair value gaps. If you don't know what that is, look it up. You need to see those being disrespected, all right, for shorts to be valid. If you are moving higher and higher and you're continuously filling imbalances, fair value gaps, and displacing higher, there's no reason for you to be shorting, right? Because you're continuing the bullish order flow. You're continuing to move to the upside. If you're not disrespecting a fair value gap or an order block, there's not really a change in structure or a break of structure or anything. There's nothing for you to be shorting, okay? An example of this I'm going to show you is literally the trade I took today. Okay, so putting this all together, okay, I'm going to show you 2 trades I took today using these exact 3 things. First, these highs, right? These are the most obvious highs because these are the last highs that were put in before we had this huge, move to the downside, right? Like, just look at the chart. These are the highs that haven't been taken yet. Wait for price to develop. Okay, boom, swept the highs. Am I shorting now? No. Wait. Price develops. Okay, what's this? We start to change structure. We have a break of structure. Look it up if you don't know what that is. Start to see some sellers stepping in, moving to the downside. We have 2 fair value gaps that are unfilled, right? Potentially there for an entry. I don't enter off of just that. I want to wait for more confluence. What is the next step? SMT, right? Price developing, kind of just twerking on this shit. All right, what happens here? If I zoom in on ES, you can see here we had a high and then we made a lower high, okay? We have a high, we made a higher high. This is SMT, check mark, right? Boom, getting hard, erection time, getting ready to enter, okay? I'm hard as fuck, I'm ready, I'm like, just popped a rhino pill. I'm fucking ready for this shit to go down. So I'm waiting. I'm continuing to wait. Last step, right? What is it? You wait for bullish PD arrays to get disrespected. This right here is a fair value gap. If you don't know what that is, I don't know why you're even watching this far into the video. Motherfucker. We come down. Now, we did get a tiny, 2-tick close below. But, I'm not really entering on that shit. I didn't really feel too confident because this could just be, getting filled and we might just sweep higher. But with this SMT put in, this is, my eyes are, locked now. I'm like, okay, this might be a good opportunity to catch some sort of short. Wait for price to move down, okay. This, now, I'm, very confident that we're going to continue lower. After disrespecting this and getting this type of price action, you want to see price come back into one of these areas, right? Either this area right here where orders were filled, or this fair value gap that got inversed. Now, once it does, I waited, right? I didn't just set a limit order because a lot of time limit orders lack confirmation. I market ordered. I waited for this to come into this area. Once we started to get some displacement, I got an entry. 2 contracts, super light risk, had a super tight stop, and this is why I love trading these 3 ways because you have such good RR a lot of the times. You can either put your stop here or you can put your stop here depending on your risk. Either way, you wouldn't have got stopped out. It's the freest trade you could have taken, okay? Price comes up, start to get a reaction off of it, entered once we closed outside of this gap. Right? You want to see a closure outside. You don't want it to be inside. You don't want it to be above. If you're going short, you want the close to be below. We closed below. I got in. Was able to catch this sexy trade to the downside. Right? And then I was able to catch another entry. Right? And took it a little bit lower. This was my first TP and then got out here. But this is how I use this almost every day. It is the highest win rate thing that I have found in trading, okay? And I wish I knew this sooner. All you need is a high time frame. All you need is a high time frame liquidity sweep, SMT, and bullish PD arrays to be disrespected. That's all you need. That is literally all you need. And you're okay to enter, okay? Thanks for watching. I hope you understood. I hope maybe you learned something and you can take this and implement it in your own trading, right? If not, fuck you. But yeah, thanks for watching.